In this video, we'll discuss what fractal points are and the logic behind them. Let's begin with a simple definition of this concept. But before we dive deeper, if you find this content valuable, make sure to hit the like button. And if you're new to the channel, don't forget to subscribe and turn on the notification bell so you never miss our latest updates. I'll catch you right after the intro and disclaimer. A fractal low is a three-candle formation where the lowest point of the middle candle is below the lows of the first and third candles. Conversely, a fractal high forms when the highest point of the middle candle exceeds the highs of the first and third candles. Keep in mind that a minimum of 3 candles is required for this structure to appear. However, it can also consist of 5, 7, or even 9 candles. Many traders assume that patterns with more candles carry greater strength, but in truth, this makes no fundamental difference, as that assumption isn't entirely accurate. If we illustrate any fractal using simple lines, it will always display a V-shaped structure with 3 main points. The first point represents the candle's opening. The second point marks the price extreme, the moment where the price reached its highest or lowest level. The third point indicates the candle's closing. When this line slopes downward, it signifies a price decline, and when it slopes upward, it shows a price rise. This means that every fractal reflects a natural price rhythm. Essentially, a chart serves as a visual representation of the points where the balance between buyers and sellers shifted. In simpler terms, it begins when most traders are selling, causing strong selling pressure. Later, buying activity increases, reversing that momentum. If you observe closely, during the creation of a fractal, you'll notice support zones, formed by sell and buy candles, and resistance zones, formed by buy and sell candles, that highlight these balance shifts. Now, let's explore a few real chart examples to understand this more clearly. This is a continuous time frame, and in this scenario, we observe that once the next candle forms, the price starts trading slightly above the opening level but soon begins to decline. 4 key levels are established: the opening level, the bearish candle's maximum, the closing level, and the minimum. This sequence repeats twice more, revealing a complete fractal low, forming a perfect V shape. As another candle closes, we can now identify a fractal high, which appears as an inverted V shape. Another notable occurrence seen in candle closes is when a candle records both a higher minimum and a higher maximum compared to its neighboring candles. Many beginner traders struggle to determine which point deserves attention. However, since the principle functions identically in both directions, there's no need to favor one over the other, just recognize the concept as it stands. It's evident that everything depends on the time frame you're analyzing. Yet, this only influences the scale of movement, not its underlying logic. Now, let's examine more examples from different time frames. Fractal points have an interesting role. They help provide liquidity to the market. This occurs because the orders placed by different participants usually sit outside these boundaries, and when price reaches them, the event is known as a sweep. These pending orders are triggered, causing higher volatility in that price zone. The challenge is that no one truly knows whether the triggered orders are buy or sell. If we take a fractal high as an example, 2 primary situations can occur. At and above this level, if sell order volume surpasses buy order volume, it triggers a reverse reaction, pushing price downward. This represents a daily fractal high. On the 4-hour time frame, price gradually approaches this point and initiates a liquidity sweep, leading to an immediate drop. This indicates the presence of strong selling pressure within that area, regardless of whether those sell orders were previously set as limit orders or created in real time. Generally, this zone can be identified as one of seller interest. Hey traders, you've been asking for it, and it's finally here. The 2-month SMC Trading Mastery course drops this November 1st. This isn't just another course, it's a complete system to master smart money concepts, manage risk like a pro, and build consistency in your trades. And here's the crazy part. It's only $500, plus 61% off for pre-bookings before November 1st. Oh, and we're giving away 5 $100,000 funded accounts to our students. Don't wait, click the link, secure your spot, and let's make this the turning point in your trading journey. See you inside. In the opposite case, if buy volume exceeds sell volume, the price accelerates in its original direction. For instance, on a daily time frame, a fractal high may form when observed on the 4-hour chart. Instead of a retracement caused by selling volume, additional buying pressure emerges, driving a rally and triggering a fractal high sweep. But that's not the full story. A fractal marks a point where the market balance between buyers and sellers shifted previously. Therefore, when the price approaches these levels again, extra volume can return to the market. This happens for two possible reasons. Some traders prefer to operate at specific price levels, where they intend to buy or sell, causing forced imbalances when their orders execute. Another reason arises from price interaction with previous liquidity sweep zones, where participants had built positions before. When the price revisits that zone, trading volume rises, sparking a reaction or reversal. Here's a classic example. On the 4-hour time frame, the price gradually retraces, and a liquidity sweep of the fractal low creates a sharp reaction, forming a new fractal low. For context, this occurs within a bullish trading range, where no order blocks, rejection blocks, or fair value gaps exist on the daily time frame. On the 1-hour chart, price retests that level, and after some consolidation, buying volume quickly rises, suggesting position accumulation by traders within that range. Here's another recent case with EUR/USD. Since price moves within a monthly bullish FVG, this zone becomes a bearish interest area on the daily time frame. We can see a compressive upward move, where each new fractal low forms slightly above the previous one, building support zones that prevent further declines. This forms what's generally called a liquidity pool. Still, the principle stays the same. Fractal structures highlight areas where market balance has shifted. Now comes the key question: how can we use fractal points in trading? This is a more advanced topic that deserves deeper exploration. However, one main principle applies. Aim to capitalize on price reversals through these formations. The first approach is to observe a fractal liquidity sweep and wait for a reversal confirmation. For example, the price sweeps liquidity above the daily fractal high, and an order block forms on the 4-hour chart, serving as confirmation. Entries can then be taken from the broken support level, with stop losses placed above the movement extremes. Take profits can be set at equal low zones, providing around 1.8% profit. The second approach is to open a position directly at the fractal level, provided there's additional context. Similarly, on the 4-hour time frame, when the price performs a sweep and forms a rejection block, that setup can be valid. After some time, a fractal low emerges within that rejection block, creating an ideal entry point for common targets such as equal highs. The test completes, and take profit is instantly achieved, yielding about 2.9% profit. That's it, traders. Thanks for watching this video. Everyone craves results, but very few stay consistent, and that's exactly where the difference lies. If today's video gave you something valuable to apply, make it count by hitting the like button. And if you're new here, don't forget to subscribe and turn on the notification bell so you're always ahead of the game. Keep your mindset sharp and your focus steady, because those who stay committed always finish stronger. I'll see you in the next video.